How Donald Trump can replace the IRS and income tax with tariffs. Donald Trump has announced plans to abolish the IRS and eliminate federal income taxes, replacing them with tariffs on imported goods. This proposal aims to shift the tax burden from hard-working Americans to foreign exporters, ensuring that American citizens keep more of their earnings while the government still collects the necessary revenue. If implemented correctly, this plan could revolutionize the U.S. economy, boost domestic manufacturing, and create a more self-sufficient nation. However, it will require a strategic, well-executed approach to ensure that revenue shortfalls, inflation, and trade retaliation are all properly managed. Here's a detailed breakdown of how Trump can make this work and what needs to happen for this plan to succeed. Step 1. Understanding the Revenue Replacement Challenge. Currently, federal income taxes generate around $2 trillion per year, funding essential government programs, defense, infrastructure, and social services. To eliminate income taxes, Trump must ensure tariff revenue can fully replace this amount. Trump has proposed a 25% tariff on all imported goods. However, import tariffs alone will not be enough to completely replace the $2 trillion in lost income tax revenue. Based on recent trade figures, a 25% tariff on imports could generate between $700 billion to $900 billion per year. A significant amount, but still leaving a shortfall. How to close the gap. 1. Expand domestic production to create more taxable economic activity at the state and local levels. 2. Implement a small national sales tax on imported luxury goods, exempting essential items like food and medicine. 3. Introduce federal spending cuts to reduce the total amount of revenue needed. By structuring tariffs in a way that maximizes revenue without harming American consumers, Trump can create a system where foreign countries, rather than American workers, fund the U.S. government. Step 2. Strengthening U.S. manufacturing to reduce reliance on imports. If the U.S. continues to rely on foreign imports at high levels, tariffs could cause inflation by increasing costs for consumers. To prevent price spikes, America must increase domestic production, ensuring that more goods are made in the U.S. rather than imported from overseas. Key policies Trump should implement to encourage domestic manufacturing. 1. Massive tax incentives for companies that build factories in the U.S. 2. Lower corporate taxes for American manufacturers that produce goods domestically. 3. Direct subsidies for industries that are critical to national security, such as semiconductors, steel, and pharmaceuticals. 4. Energy independence policies to lower production costs, ensuring cheap and abundant energy for manufacturing. 5. Deregulation to remove bureaucratic obstacles that slow down factory expansion. By making it cheaper and easier for businesses to produce goods in America, fewer companies will rely on foreign imports, reducing the risk of consumer price increases while still generating significant tariff revenue. Step 3. Structuring tariffs to prevent inflation and keep consumer costs. Low tariffs work best when they target foreign exporters and protect American consumers. A poorly structured tariff system could raise prices on essential goods, hurting American families. Trump must design the system carefully to ensure that tariffs only raise money from the right sources. How Trump can structure tariffs properly. 1. Keep essential goods tariff-free, ensuring that food, medicine, and necessary household products remain affordable. 2. Target luxury imports and non-essential foreign goods with higher tariffs. 3. Introduce a gradual tariff increase over 3 years, allowing businesses and supply chains to adjust without major disruptions. 4. Negotiate with foreign producers to absorb part of the tariff costs, reducing how much of the increase is passed on to U.S. consumers. With this structured approach, American families will not see major price increases on everyday goods, while foreign corporations shoulder the cost of funding the US government. Step 4. Avoiding trade wars and ensuring global cooperation. One major risk of implementing high tariffs is that other countries may retaliate, imposing their own tariffs on US exports. This could hurt American businesses that rely on global markets. To prevent this, Trump must negotiate strong trade agreements while maintaining the US's competitive advantage. How Trump can prevent trade retaliation. 1. Negotiate trade deals that offer American energy exports, like oil and natural gas, in exchange for lower tariffs on US goods abroad. 2. Pressure China to end unfair trade practices while strengthening trade relationships with allies. 3. Ensure fair treatment in trade negotiations with countries that currently impose high tariffs on American-made goods. 4. Work with Mexico and Canada to strengthen North American manufacturing, reducing dependence on overseas imports. By leveraging America's economic strength, Trump can prevent trade wars while still raising revenue through tariffs. Step 5. Cutting government spending to reduce tax burdens. Eliminating the IRS and federal income tax also requires smart budget management. The US government must reduce unnecessary spending to ensure that a tariff-based system can sustain essential government functions. Key areas where Trump can cut government spending. 1. End wasteful programs and unnecessary federal agencies that drain taxpayer dollars. 2. Reform entitlement programs to prevent fraud while ensuring they serve those truly in need. 3. Streamline military spending, focusing on modernization rather than outdated systems. 4. Eliminate excessive foreign aid, redirecting those funds to domestic infrastructure projects. By reducing federal spending responsibly, Trump can ensure that the government can function effectively under the new tariff system without requiring new taxes. Step 6. Rewarding American citizens for being American. The final step in Trump's plan should ensure that American citizens, not just businesses, directly benefit from this tax reform. How Trump can ensure the American people benefit. 1. Create a tax freedom dividend, a rebate check distributed to all Americans from tariff revenue. 2. Raise wages by encouraging businesses to reinvest tax savings into their workers. 3. Provide tax-free savings accounts for working Americans, ensuring they can keep more of their money. 4. Eliminate capital gains taxes for middle-class investors, helping families build wealth and retirement savings. With this approach, the new system would reward hard-working Americans, making the US tax-free for its citizens while funding the government through foreign exporters. Final verdict: can Trump make this work? Yes, but only with the right execution. Eliminating the IRS and income tax is a bold move, and it must be carefully structured to prevent inflation, trade retaliation, and revenue shortages. By combining targeted tariffs, domestic production incentives, budget reform, and trade diplomacy, Trump can successfully replace income tax with tariffs while strengthening the American economy. This strategy would shift the tax burden away from American workers and onto foreign exporters, allowing Americans to keep more of their hard-earned money while benefiting from a stronger, self-sufficient economy. Would you support abolishing the IRS and replacing income tax with tariffs? Do you think this is the key to making America financially independent again? Let us know in the comments below. Like, share, and subscribe for more updates on AI, politics, and economic strategy.